Sounds good. Welcome, everyone. This is Spectertrader, and today we're going to go over the market internals. Just a little disclaimer before we start. We are not registered as security broker or investment advisors, either with the SEC or any state regulatory authority. We are neither licensed to provide investment advice. All trades posted in this room are entertainment purposes only. We're not liable for any potential losses. Market internals. So the first internals I want to go is the NYC Tick or the NYC Tick. And what the NYC Tick is a measure of the net number of stocks on the New York Stock Exchange that is trading on an uptick or a downtick at the current moment. And this right here on the bottom is a representation of what the NYC Tick looks like on TOS. So basically what you need to know is that the NYC Tick or the NYC Tick is basically an indication of strength or weakness in the market. So for example, if the NYC Tick is holding above zero and is continuing to hold positive, if it can hold above zero and it is printing significant values, it gives me a bullish bias. Now, if we have extreme values where it'll be printing plus 800, plus 1000, that gives me a very strong bias for a potential uptrend day. Now, vice versa. So if the NYC Tick is holding below zero and showing significant negative values, which means like if it's printing negative 1000, negative 800, that shows me that the market is extremely weak because a lot of stocks are at the current moment moving down, and over a period of time, if it keeps printing mostly negative values and holding below zero, that shows that there's really a lack of buyers in the market and we should probably downtrend. Now, if the NYC Tick is both positive, it has both positive and negative values about equally distributed on both sides. So it's not clear which side is more dominant. That shows that it's more likely going to be a balanced, choppy day, and we most likely will be range bound on the S&P. So this is very good to know, even if you don't trade S&P or the futures, because it gives you an understanding what's happening overall in the market throughout the day. So it applies to individual stocks. So if you're trading, let's just say you're trading something like Apple, maybe like, I don't know, Netflix. If you see that we really lack any momentum to the upside, you got to be very careful going rather long. I mean, for a choppy day, then you don't overstay on your long, because you can't bet on a trend up day if there's no real buyers coming in. And if it's showing significant weakness in the market, then that would be, then you'll be very, very careful on the long side. You'll be very patient, because if we get some if we have a lot of weakness in the market and you go long and too early, you would easily get destroyed. So this just gives you like sort of a reference of sorts. Okay, let's see. So one of the points is, if we have a high price at the same exact time, so if we see like a extreme value being printed, like negative plus 1200 and making like all-time highs, that could show that we actually might be making a high of day, and that could be actually the top at the current moment. Another key point is a strong tick reading on heavy volume can indicate that we have really heavy volume coming in. So a lot of large players like funds and institutions are either profit taking or buying it up. So if we see like extreme negative and positive values, that gives me an indication that buyers and real sellers in the market. Whereas a very low tick reading like plus 200 or negative 200 shows that there's just more of a choppy environment, where algos take over, where it's just playing the range and stuff. And so if you see a strong tick reading, it really gives you a warning to stay away from fading it too early. Fading means to go counter trend. So if it's going up, fading something going up, it will be shorting it, and fading something that's going down is going long reversal. So another key point is if you're long, let's just say the ES or S&P. If you're long the S&P, you will be watching the tick for continuation. So let's just say we make a quick flush, drop to a nice support level. You go long. If we cannot reclaim, and this is for a day trade, by the way, if we cannot reclaim quickly, so if it prints negative 776 and it doesn't reclaim above zero, then that shows that we might still have some weakness, right? And if we have weakness, it could still continue on and break the lows and continue lower. So I would be careful and probably scalp it. But if we reclaim quickly from negative 700 back above zero, that just shows perhaps it's just market being temporarily emotional, some stops being hit, some panic, just temporary panic, but not real selling. Then your long will be okay for the upside. And depending on how tick behaves, if it keeps holding above zero, perhaps printing significant values like plus 500, plus 800, plus 1000, that gives you a continuation. That gives you the confirmation to hold for continuation. So you could hold past the breakdown area. So if it broke down from a consolidation area, had a quick flush, you went long, and it went back there, but the tick is continuing to stay positive and even make new recent highs on the tick, then actually you could hold that for continuation, and there's a possibility of this actually reversing and breaking higher. So yeah, so next point. Yeah, so I talked about this actually before. So if a market hits a key support level and it cracks through, it flushes, you see a negative 1000. If the volume stays relatively low on the chart, then that just shows that day traders are being stopped out, and you could fade it by entering long and ride it back for a bounce. Next point. Let's see. So the next market internals that I want to go over is advanced decliners. So the advanced decliners are basically the number of advancing stocks versus the number of declining stocks in the market. So for example, if we're like plus 500, that shows that we have 500 more stocks that are net positive than negative. And if we're negative 500, that shows that we're 500 net negative than positive. So yeah, it's just simply expressed as the number of advancing stocks versus the number of declining stocks. So it'll be minus between these two. So why is this important? Well, sorry. When the major indices are rallying, the advanced decline line can correlate in association. So it's much like the NYC Tick, where a rising AD line does confirm that we have a potential uptrend and strong participation. So there are about 3,000 stocks on the NYC, the NYC. If the advanced decliners show that we have a reading of plus 1,500, that shows that we have a lot of strength in the market, we have some real buying in the market, and it's a pretty bullish bias, especially if it's above 2,000. So, and the reason why is because, that it's measuring the NYSE stocks, and if they're all net positive and they're all pushing, well, it just makes complete sense. The market's strong. It gives you, like I said, internals, like literally in the name, it gives you internals to see like what's going on behind the scenes in the market. And that will give you a massive edge, I would say, especially if you're trading. Because if you're trading blind, you don't understand what the overall context is, then how can you, I mean, you have less of an edge. You're kind of trading blind. You want to be able to equip yourself with as many tools. I mean, not too many where it's overwhelming, but you want to have such tools in your pocket so you're able to stay flexible and have it as market intuition to keep you, preserve your capital and obviously help you make money. So, going back to the point, if we have something where it's negative 1,000, negative 1,500 lower, that's a pretty weak indication. It shows a lot of weakness in the market, and something below negative 2,000 shows that there's a lot of real selling. And what I mean by real selling is actual big players selling. Whereas, if you have negative 300, negative 500, that's more of chop, to be honest. It's not really a significant bearish day. You might have a slightly bearish day, but it's just like small fish really playing. And that just shows that it just tells you who is really participating in the market. If you have a lot of big players in the market, then obviously, well, the market's going to move. That's how the market. Sorry, one sec. That's how the market moves. You have these big players really moving the market, whether there's a catalyst of like news or whatever. I mean, whatever the case is, this gives you quantitative data to support your idea. Now, like I said before, extreme readings really gives us a hint of trend days, and which is when price action breaks higher or lower, and as long as advanced decliners are, then it will usually trend up all the way into close, or if it is continuing to stay weak, then we're going to trend down. Now, if we have a recovery and reversal on advanced decliners, let's just say, excuse me, if we have negative 1,000 and we're like pretty heavy, but all of a sudden we catch a bid, we have some big players. Let's just say we go to like a very key level on the market, and maybe perhaps that triggers a long trigger for some funds to step in. Then we'll see a reversal in the market, and advanced decliners will give us a hint that we're having a reversal. We stayed weak from 1,000, but we start seeing some absorption at the lows, some buyers stepping in, some stocks recovering, and that will show us that most likely we're actually going to reverse this downtrend and potentially continue higher. The final concept I want to go over is something called when the advanced decliner is pinned. So when advanced decliner is pinned, that really shows a very extreme situation. So let's just say we hit positive 2000, we hold above positive 2000, and we hold above positive 2000, and we're like literally pinned at the highs, hence the name. That really shows that we have a really, really strong market. And I mean, something like this is an indication that we could continue trending for even days. Whereas if we're pinned to the downside and we have negative 2000 and holding below, that's pinned to the downside, that shows really extreme weakness. And something like that, that could be an indication of perhaps a correction or even a market crash. Especially in a market crash, you'll see the advanced decliners really pinned because, obviously when the market's crashing, everything's just getting destroyed, right? So if we're having a market crash, you will see the advanced decliners let us know, and it'll give us a hint, and that will tell us to stay away from buying too early, because you never want to really be too early. Being too early is really never fun. The next market internals I want to go over is the breadth ratio, which is this box right here. I have the NYC breadth ratio and a NASDAQ breadth ratio. I usually use the NYC. And basically, the breadth ratio is a volume ratio composed of volume flowing into up stocks versus down stocks. So, for example, if we have 100 million that are up on a day, and then we have 50 million shares and stocks that are down on a day, the breadth will show it as 2-to-1 because 100 is twice of 50. And it's 2-to-1 positive, showing strength. So twice as much volume is up stocks versus down stocks. Because, to have a trend up, you need to have more stocks going up than down. If we have a 2-to-1 positive and the market is pushing higher and we drop from 2-to-1 to 1-to-1, that is a sign that we are getting weaker in the market, and it's time to take profits on longs and start looking for a potential short for a reversal. Now, if we are negative ratio, if we have a negative ratio, that shows that we have more stocks overall moving down than up. And that shows that we have a very weak market. The greater the ratio is, the more weak the market is. So if it's -3, it's more weaker than -2-to-1. And vice versa. It's 2-to-1 is 3-to-1 is stronger than 2-to-1. Yeah, so anyways, breadth ratio can just be something you can have on your chart. It's basically something that really it's like a gauge of the market. It tells you how much gas the market has. So if you're like, let's just say the market is a car, and you want to know how far can this car go before running out of gas. This breath ratio can give you a gauge into how much gas we have. Because if we run out of gas, if we don't have much gas, the market can't go anywhere. It's gonna have to refuel, hence we have consolidation. And once we refuel after consolidation, then the car is ready to go again. The final and last market internals to go over is the VLD. You could find this on TOS, $VLD. Just type it box. And this is the chart of what it looks like. The VLD is the net difference of up volume versus down volume on the New York Stock Exchange. It is represented by UVol minus DVol. UVol and DVol represents the total amount of volume, all stocks that are going up or down on price. It is up and down or down based on the closing price of the previous session. So the amount of which the stock's price has changed is rather irrelevant. So it's more of a broader type of indicator. So it's not as precise as, for example, the NYC Tick. But this just gives you a rough estimate of how the market really is. We don't really use this one too extensively. The way to use something and also the breath ratio is to glance at it from time to time. We don't look at it tick for tick. That's just that's just a waste of mental capital and energy. Rather, this is something you have on your charts. You reference it from time to time, but you just glance at it. You see, okay, we have a pretty bullish bias. Okay, good to know. And then once we start seeing weakness, then we will start looking to take profits or look for a short. And yeah, let's see. Look at my notes. Yeah, so that's pretty much it. The VLD, and yeah, this is the final market profile. The market internals indicators that I wanted to go over today. But yeah, this is a little quick webinar presentation on the market internals and how you use it in a basic sense. But besides that, we're pretty much done with this presentation. Do we have any questions for me?
Nope.
No, right, I'm good. Cool.
Yep. I want to thank you all for attending, guys. I want to thank you all for attending. If you guys are interested in learning more about this, be sure to subscribe to the Haikhuu YouTube channel and join the Discord. Thank you.
Bye.
Awesome.